Hello everyone. Today we're going to have a brief market recap, then talk about the UK industrial production and China's CPI data coming out later today. This is Marshall Gittler, Editor of Investment Research at FXPRIMUS, bringing you my European opening market comment. Well, currencies moved in an extraordinarily narrow range ahead of the US election tonight. Most of the action was in the stock markets as US and global stocks rebounded. Investors seem to like the idea that the Democrats win the White House and the Republicans win the Senate. A split government like that means continued gridlock, which makes it hard for the government to spend money. The dollar was slightly higher and euro-dollar moved lower, breaking an 8-day string of higher lows for the pair. The Swiss franc rallied as some investors started using it as a hedge against a Trump victory, rather than using the yen. The Swiss franc hasn't moved as much recently as the yen has. And sterling was lower after a speech by Brexit Secretary Davis, in which he suggested that the government won't make any new concessions to Parliament because of the recent High Court victory, and instead will push on with its end March 2017 deadline for triggering Article 50. Oil rose after the OPEC Secretary General said the group has agreed to use independent production data to calculate proposed production quotas. He also said Russia is on board with any OPEC agreement to limit production. As for today, well, today is the tomorrow you worried about yesterday, or worried about for the last several months in some cases. I put out 2 videos yesterday on the likely reaction to the election, one about what happens if Clinton wins, and one if Trump wins. Please watch those. Also, I have one that explains how the U.S. election system works. That's important to know to understand the results. It's a pretty strange system. As for the indicators, in Europe we get German and UK industrial production for September. Now, German IP has already come out. It was lower than expected. In the UK, production is expected to be flat on a month-on-month basis. That's an improvement from the previous month's drop, and would show that the economy is at least stabilizing after the Brexit shock. The year-on-year rate, in fact, is expected to accelerate. That could be positive for the pound. Then, overnight, Chinese inflation is expected to accelerate further. Ordinarily, that would be positive for risk, but coming as it does just as the U.S. election results are due to start coming out, I doubt if it'll impact the markets. This is Marshall Gittler, Editor of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.